Good morning, good morning, good morning. Welcome to Wednesday, May 22nd. We are day trading the NASDAQ and we're going to have a good day today. I was not here yesterday. Glad to be here today. Really excited to see what the market has to give us today. We have some news this afternoon, so morning could be potentially a little rough. We'll honestly see what happens, but opening is happening right now. Let's go ahead and see what happens here. As far as where we are in the market, we recently hit all-time highs again over the evening, which I expected. We can see the all-time highs sitting right here. Let's go to the hourly here. We have all-time highs sitting right there. I'm expecting price, where am I expecting? We could go higher, but really I'm looking for bearish moves. That's really what I would like to see, but we could definitely not get that. Now, the reason I say that is because we made an all-time high over the evening. So I could see price wanting to actually push, make a new high, and then move lower. I do have this 1 hour BISI sitting at the way down here. And we are, we have 50% retracement right here. We never actually hit that level. So that's where we are sitting at right now. So it's just a matter of waiting and seeing what happens here. We have a 15-minute fair value gap. I've been watching this, but we got 13 minutes before we close. If we close above this, that's a bullet. That's a strong bullish signal, to be honest. Let's see here. And that brings us down to where we are right now. So price just opened. We have our all-time high sitting right here. And let's see where price wants to go. Yeah, so here we have, I like the way the 5-minute looks. It just gives us more context. So this basically was a market maker buy model, and we are about to complete the market maker buy model. We could have been completed here, and it may want to push through here as well. We just don't know yet. Based on this momentum and the structure of this, I'm expecting price to just blow through this high. But it's just a matter of what does price want to do after. Okay, so we're hitting it right now. What does price want to do after? Does it want to close aggressively above, or does it just want to wick above and then start moving the other direction? That's really what I'm watching for right now. I'm not looking to go long right here. That's just not wise to do that. So we want to see how price wants to react. We're just going to sit here and wait. Sit here and watch. Sit here to see what happens here. Let's see here. All right, so now I have this. I'm going to move. Sorry, not that one. We have this right here. We're going to move to this high because it is the new high. It's still sitting right here below where we swung. So we haven't retraced up to 50%. We were close. We retraced pretty close to it, but I really like to see us go below that 50%. And then if you look at the 15-minute, this is just my reason for a short biased for the day. Is if we go down to the 15-minute, we have this 1 hour. And then right smack dab in the middle is this 15-minute. The consequent encroachments of both the hour and the 15-minute overlap. This is correlating. So this makes this very interesting, and it draws my attention to it to see, does price want to come down into here? That's part of the reason why I think we're going short. The second reason why I think I'm looking for short is because we hit all-time highs over the night session last night, and we are wicking it first thing this morning. So it tells me, man, we may want to go short, and I'm already liking the way this is looking. Oh man, I forgot to get my stuff set up. Shoot, I'm not going to be ready to take this trade if this goes. We have a high, low, higher high, and we just broke the consequent encroachment. And I might miss this. I'm going to be really disappointed not having everything set up here. If it keeps going higher, that would be nice, to be honest, because I don't want to miss a trade. All right, what do we got? Sorry, I'm just getting my accounts set up here. Okay, I think I'm all ready. We are going to be executing on the screen today because just of my current setup that I have. All right, we got that. All right, so we have this level here. We just broke through that, and our breaker low is sitting right here. This is our breaker. Okay. I would like it to close down here and then come up and touch this. That's honestly what I would like to see. The only thing I don't like is I really would want to see a higher time frame market structure shift because we're at all-time highs. Being at all-time highs is the desire to actually go higher is really strong. So we just closed right at this level. We could go short right here. I really like it, but I really don't. We could just blow right through this and go and hit highs again. So I think I need more confirmation that we want to go lower. I'm willing to miss the first opportunity for knowing what kind of press action we may see. Good morning, BF. It's good to have you on here. Thanks for joining. We are watching the NASDAQ here this morning. Oh, we want to change this to 1. I don't want to do that. So today is going to be interesting. I started trading off screen because it just felt more comfortable as I'm getting started doing this whole live thing. But my off screen is my micros account, and based on where my micro and mini accounts are, I'm going to be trading my mini account and copying that to all my other accounts. So I'm going to be trading on screen today. We'll see how that goes. So we're respecting this breaker right now. We'll see if it just wants to push lower. I'm not going to take this. It could be a very good trade. We're 5 minutes before the macro though. It's definitely playing out. Your target would be this low right here. Assuming we got in somewhere around there, your stop loss would have been 10 handles. That's 10 handles right there. That's almost 20 handles right there. Now that we're seeing, I like this candle right here. This candle is more attractive. If we were to go back up and then touch this before we hit these lows, that would make it more interesting. But because of this price action right here, all this price action before this big displacement candle was suspect. It did not tell me we really wanted to go down, and because we were hitting all-time highs, I can't do it. I can't go short when I have just this type of price action, even though we have a high, low, and a higher high. I'm not willing to take that quite yet. We just rebalanced this fair value gap down here and this 5 minute right here. I do like this. I do like this 1 minute right here. If we aggressively close above this, I would be interested in that. I just would be looking for it to break this high, move my stop to break even, maybe target the highs. But I would want to see it happen right away. If it's very lazy in getting up there, I lose my interest on it. Oh. Looking at the 2 minute here. 2 minute looks, I like high, low, higher, high. You could see price stop here and then go down, but again, it's 50. We're 50-50 here, folks. It's 50-50. This is a high, low, higher, high right here. We have a breaker, but see how it's just pushing above this breaker? I'm waiting for a close. Want to wait for a close right here. I bet you it's probably the 30 second probably is going to work. The 30 second probably will close, but it's invalid. I'm not going to take it now. We already hit. What I was looking for here is for us to close above this box right here without hitting this swing high sitting right here. Because then once we hit that swing high, I can move my stop to break even. It's a free trade at that point, and we would look at targeting these highs. This is why this right here is the reason why. Like, this breaker, while it looks nice, we're at all-time highs. I need some reason and proof that price wants to move lower. If not, I need to remain bullish, even though I don't want to be bullish. That's why I'm not taking anything. I mean, I would have taken this to the upside because we are bullish, but I can't. It just invalidated it. So it's not an option. Now we just sit and we wait for our next opportunity. Five-minute looks absolutely horrendous. We got this giant wick. When we have this giant wick, you treat this giant wick as a fair value gap. So we're looking at this consequent encroachment about right here of this 5-minute to see if it wants to stay above it. That's what we would look at that. If we jump to the 15-minute still doesn't give us any indication on where price may want to go. So we have this high, we come back down into this 15-minute fair value gap, and then we start pushing higher. That's the reason for us to go higher. On this candle at 9:30, we wick the high. Now, the reason for this to go higher is gone. We need additional context to know why does price want to continue higher, and based on the 15-minute, we just don't have it. If we look at the hourly, if you look at this, it bounced off of this market structure shift right here, or this breaker. This would be considered a breaker on the hourly. So we have, actually, I think it looks better on the 15-minute. Let me get rid of this line here. Let's do the 15-minute here. So here's our low, high. We place the breaker on the close of the highest green candle, and here's our lower low. Price breaks through. It hits it once right here. You could have went long at 215 yesterday, and that would have been one of your entries. But we also came and we touched it here again at 6:30 a.m. if you were training the early morning session, and we pushed higher and hit new all-time highs. So that was a nice breaker, just wasn't on for it. Yeah, I can't explain why, but I'm liking a short, to be honest. This hit the breaker, we've hit all-time highs. It could continue higher, but I want something. I want to look at something going short, maybe to swing these lows right here, maybe to rebalance this 15-minute fair value gap. There's another smaller 15-minute sitting right here. We have a 5-minute sitting here. And then we even have a 1-minute sitting way down here. So really, us running these equal lows, these relatively equal lows, is interesting to me. Now, seeing that this is not making a higher high right here aggressively is a good sign. It's a good sign that price may just be either trash or it may not want to go higher and we could see lower prices. But we don't have enough information quite yet to know. We got to watch it. NQ, my eye on 18,755. 18,755. Yeah, That's the breaker that I just referenced. It just hit it like money and then just exploded higher. This is, man, tell you what, this is why I love the breaker so much. If you have the right context, if you have the correct bias on the day, look at your drawdown from, if let's just say you decided to get at the wick high. Okay, let's say you decided to get in at this candle right here. This is the wick high, and then this is the body of the highest close candle on the 15-minute. If you decided to go the wick high, there's 10 handles right there. Price comes down 5 handles and then explodes higher. If you put it on the breaker, it goes down like 50 cents. I mean, this is why I love the breaker so much, is when it's right with almost no drawdown. If you're wrong, you're going to see it blow through this level and stop you out fairly quickly. And hey, it's a 10-point loss on a great setup. That is something that you need to be willing to take risk on to see if it actually plays out. This candle just was at 6:30 a.m. and I'm not on at 6:30 a.m. Morning, Raul. ES lagging a lot. We do need more information. I agree with you on that. See how we're just inching up here? I don't like this type of price action. I don't like that price action. Guess we'll wait and see what happens after we hit a high. If we make equal highs and we just drop here, then that takes away any opportunity for me to want to short. Because equal highs is a very magnetic level where price at any time could decide to go back and make these smooth edges jagged. So right now we have equal highs. Price is either going to make it jagged right now or move away to some level and then want to come back and make it jagged again. Why would price move away? Because for retail traders, they'll see these equal highs as resistance. So they're going to go short right here. Price is going to make it look like it's going short, and then it's going to come back and just disrupt their stop losses and use that as a form of grabbing liquidity. And so it took it right now and is going a little bit higher. But that's why we respect equal highs quite a lot. Now that's why I would not want to go short. If equal highs were left here, wanting to go short is like setting yourself up for failure, because at any point in time price could just be like, well, I was going to go down, but before I continue, I'm going to come back up, make this smooth edge jagged, and then I'm going to move. So see how it took that high now? I like this. I like the way that candle looks right there. I would like it to continue, to be honest. We have a breaker on the 30-second. I'm not a fan of taking breakers on the 30-second. I have in the past. Not sure if I want to do that today. Equal lows here. The other thing I want to say is when we are at all-time highs, if we decide to go short, you need to be a true scalper. You're looking for 10, maybe 15 handles max, and you're not looking for extended runs until we see the sentiment in the market change. Because right now the sentiment in the market is we want to go higher. Retail is thinking we're going higher, I'm going in. So what does it do? It shoots lower, gets people to stop out, and then goes higher. Until the sentiment in the market changes, that's the type of short player you have to be, is a scalper. 10, 15, maybe 20 handles if we really have a nice run or a nice leg where price wants to draw to. and then get out, count your blessings, take your profit, and get out. So here is a breaker right here. We have a high, low, higher high. Breaker is, I like this one. Why? Because this overlaps with the consequent encroachment of this fair value gap. So this is that's your breaker. See how it overlaps almost with the consequent encroachment? That's attractive. Now it doesn't mean I'm going short. We're still at all-time highs. We just came off all-time highs. There's no reason for me to want to go short. I just don't want to do that. But we will read price. We'll see how it wants to react to this. I'm liking how it overlaps. We also have equal lows right here. That makes it attractive. But let's see, that is 813, 821. That's only 7-8 handles. That's really close. And I'm currently in the process of making a video right now, which I'll be posting on my channel, where these fair value gaps can be a little tricky, because if we have a large fair value gap like this, price does not have to come back and touch this breaker. It could fill this, it could just touch this fair value gap, which is overlapping with the breaker, and then move lower. Here's the touch of the breaker. Let's see if it wants to respect this right here. Here's the full body of the breaker. See how aggressive that is? I'm not sure if I want to get in on that. This is why we stay away from going short directly off of all-time highs. Okay? So body is respecting this breaker so far and is showing it may want to go down. Having it inverse this small fair value gap right here makes this more attractive for an entry. But again, we're on the 30-second. Let me get out of the 30-second. I don't want to play on the 30-second. We're at all-time highs. Okay, well, I mean, just for education purposes, we'll watch this. Okay, so body's respected the 30-second. We inversed this. We probably are going to hit these equal lows. Equal low, or fair value gap inverse. This is a inversion model overlapping a breaker inside a fair value gap. We talk about PD arrays that are overlapping. This is overlapping. Breaker, fair value gap, inversion. Oh man, so this is good. I mean, this really should play out. We will hit at least these lows here. We will hit these equal lows. Easy Zero. Why don't I start a mentorship? I will. I want to provide content right now. I'm looking at building my audience and providing value. And then at that point, when it just becomes too much for me to handle, there's too many people asking for help, that's when I'll start scaling back what I offer for free. But right now, I mean, I have the time. I don't have a billion people knocking down my door. So I'd rather give information for free and help people for free, because my ultimate goal is to help specifically, this may be you or not, is to specifically help people in the body of Christ become financially free, to be free from working for their job. Okay, see what happened here? I'm going to pause here. We didn't hit those equal lows. Look at that. This is why I was not in that. That's why. When you're at all-time highs, I've just seen this before over and over again. It didn't hit it. But look, let's find out. We have 6 seconds left to see if we are going to stay in this fair value gap. Okay. We break above it. Yeah. Okay. So now the thing I want to tell you though is this inversion would have not have been a loss. Even though I said we should hit here and we didn't, this wick right here, this swing low right here is when you would move your stop to break even. So your entry would have been here. Your stop is above this fair value gap right here, this inversion, sitting somewhere around here. Let me just put it on there so you can see it. There's nothing for me right now. Okay? So your stop would have been somewhere around there. You're targeting the lows right here. As soon as this candle breaks below the, 956 candle, you're moving your stop to break even. You're putting your stop to break even. And then if it hits your target, you're taking size off or you're closing your trade. And then you let the rest run to break even if you still have something on. In this case, it would have stopped you out at break even and it went for another high. See how aggressive that high was and it closed below? That would have been a potential entry if you do soups. I'm not interested in soups. I don't trade those. So back to Easy Zero, back to your question, why don't I have a mentorship? Should I start a mentorship? That will be in the future. So for those watching now, get the most out of it you can. I don't have any time frame on when it's going to be. I am going to be putting out a course. Actually, I'll be announcing that in my next video on how to get started in futures. That's going to be coming out soon. And I'm going to be talking about a course that I am currently building out, and I'll probably just start with giving access to a course that chronologically lays things out on the way you should learn stuff. Everything you could find on YouTube for free, so you don't need a course. But if you like the idea of having it step 1, step 2, step 3, step 4, this is going to have that. That's the intention behind it. All right, let's see. All right, so now we have triple equal lows. We have all these lows right here. I mean, price will hit this. Price will hit this. You could take this 30-second and 8 seconds. I'm not taking it, but I'm gonna talk it out. So did we close? Yes, we did. This would be your entry right here, or it closed in line with this. So your entry's here. You take your stop to break even would go right. We're waiting. So it looks like this right now. Stops now to break even. Stops to break even. You're targeting these swing lows right here. If price comes back up and hits here, your break is break even. Now you stop at break even. You would have been stopped right there. This is why, again, going short this close to all-time highs just does not make any sense. If you didn't get stopped out there and you didn't put it, I would be putting your stop to break even right now. This should, to be honest, it should, but it doesn't have to because we're at all-time highs. That's why It's just one of the rules you have to respect and understand that it plays out that way. It could go in your favor, but once you've been burned a few times, you're going to realize that it's just not worth it. It's just not worth it. There, now you are for sure stopped out at break even, making this trade invalid right there. Yeah, this is not, this price action. This is crap. I mean, look at all this consolidation right here. Look at this. It's generating liquidity. That is what consolidation does. When you have up and down movement without displacement. Now, this candle may look like displacement. I referenced this candle earlier. I said I wanted to see it continue lower. It didn't. It stopped. It stopped at the first order block to the left of it. And then we go back and make a higher high. Now we have a giant green candle here. It seems like, oh, I'm getting in long. But guess where it stopped? It stopped right around this consolidation. It could go higher, but it could go back down. It's 50-50 odds. Do you want to play 50-50 odds? I don't. So that's why we have to wait for displacement. Displacement is a large green or red candle away from consolidation. That is what we're waiting for, and this is just straight trash right here. You should not trade in this environment right here. We should be waiting. That is, we are going to sit and wait. If we don't take a trade in the next hour and 15 minutes, then we aren't going to take a trade. We're going to keep cash position, and we're going to be happy. I came in yesterday. I didn't even do a live stream, but I walked away with $3,500. Oh, there we hit it right there. Now, this is the kind of displacement I like to see away from a level of consolidation. As long as it closes towards the low of this candle, that's interesting. But if we just wick this fair value gap right here, and then we just retrace all of that, leaving a giant wick, it's not interesting either. This is why we just have to wait for more information. So see how this candle wicked down? Where did we approximately stop? You got to look left. You just can't say, oh, it stopped and go back up. It went back up. Take the time and look left. Here's a fair value gap sitting right there. Here's the order block, a bullish order block right here. So when you have a bullish order block and a fair value gap immediately following it, there's a good chance that it's going to react there. So guess where this candle closed? Now it makes it not as interesting anymore. This sucks. This is crappy price action. Yeah, initially it looked attractive. I'm like, oh man, okay, we're moving now. Now I can start looking for any potential entries. No, not anymore. Not anymore. You look at the 5-minute, that just looks like crap, man. That 5-minute stuff looks horrendous. Now, the one thing I can say is when you see a wick like this, you could see, there's a good chance we'll see price make a new high. I say good chance loosely as just a way of me communicating. This is a bullish candle. This 1007 candle is a bullish candle. However, we have a giant bearish order block right to the next of it, and no fair value. There's only a tiny little fair value gap. That's not interesting. If we had a bigger fair value gap and we closed above it, I would be going long to the highs. But there's a big bearish order block, and only a tiny fair value gap. Again, price action this morning is removing all opportunity for any real entry that you could take. Let me show you guys, let's look at the news here. I'm going to just show you why we could be having this crappy price action here. All right, so let's go to screen share. This is Forex Factory. All right, sorry. Okay, so here we have, here's the news. So today is Wednesday, right? We got Wednesday morning. We want to look for just US 2 p.m. FOMC meeting minutes. That's at 2 p.m. So we have news that's going to move the market at 2 p.m. Anything before that is allowed to be crap price action. It's allowed to be horrible price action. Do I have... There we go. Okay. Sorry, I was just making sure I was still connected. Look where price stopped on this candle. We treat we treat wicks as fair value gaps. And so as long as we are respecting the 50% of this wick, it can still be considered bullish. See that? For those of you watching, no trades as of yet. Okay, so same concept. We just pulled this on this 1 minute candle here. Let's go to the 5 minute and let's do the same thing on this giant candle that happened at 9:40. So price is staying above this 50% of this wick, which we treat like a fair value gap. So bullish price action still. Patience is the hardest thing. I'm saying this out loud for your benefit and for mine, because I can't tell you how many times in the past I've not been patient. I traded, lost, had some wins, and then the perfect trade took place, 2 hours into the stream, or 2 hours into the day, 3 hours into the day, or even more. And it's like, man, if I just had the patience to wait for this, I could be so green on the day. That's why we're waiting, because there'll be an opportunity. Now, if we are able to capitalize on it or not is another question. We'll see. But logically, think about this. Do you want to trade in this price action? For maybe you haven't been doing this or not. Very long. Do you want to trade in this type of environment? Or Would you rather trade in an environment that has this kind of price action? Okay. We have a low, high, lower low, and we find, or we have even a mitigation. See how clean this is? Price comes down. This isn't even a model, but look how it goes lower, higher, a little bit lower, and it just flows. See the difference between this and our current price action? See how this is just like, wow, where's my opportunity here? This is price action you want to stay away from. Easy Zero, how many trades normally do you get? I'll do, if I get a really good win on my first trade, I should be done after that. Because ultimately, I'm looking to make $200 on one contract every day. That's all I really want. If I can do that, copying it to 10 different accounts, that's $2,000 a day. I'm trading for money. I'm not trading for wins. So if I'm trading for money, as soon as I get the money that I need to see my profitability go up, then I want to cut it off there and not overtrade and be happy with that. I will not take more than 5 trades a day. That's my hard set rule that I have. No more than 5 trades, no more than 2 losses. And if I take some small break-even trades, which are possible, I mean, I just called out 2 or 3 break-even trades. Well, I'm still going to sit and wait for my trade up. Now, if it's break-even after break-even after break-even, I get 1 loss. 5 is my limit. There's a 30-second that looked really nice. And a breaker on the 30-second. I wouldn't have taken it. Do you guys see that? Let's see if you can see it. Tell me the minute. This is a 30-second these are 30-second candles. See if you can see on your chart where the breaker is. And at what candle would you get in based on the breaker? I'll wait. I want to see if you guys can. I know there's only a few of you here on stream, but let's see if you can see it. We also have an inversion. Here's the inversion right here at 10, 12, 30. 10, 12, and 30 seconds. We closed above. Price actually comes down, does not stop you out, and then targets these swing highs. So that would have been an inversion trade, a bullish inversion that you could have taken. But it also overlaps with a breaker. If you haven't seen the breaker yet, let me show you. Here's our low, our high, and here's our lower low. See how this candle's body closes lower than this candle's body? I will call that a breaker. So this is our breaker high, and we take this candle and we take the swing high of it and we move it across. If you missed this inversion and you see it come back down and wick into the breaker, that is your entry. And look what happened after that. Look how aggressive after it hit that breaker. It went and target these highs. That is price action I like to see. It's just on a 30-second chart inside of all of this chop, so I'm not interested in it. Which prop firm? I currently use Apex. I use Apex. They make it a little more difficult, but after everything that has happened in prop firms lately, to be honest, they have been the only ones I've seen that have been consistent on the future side of things. I know I won't touch anything I don't do Forex or anything like that. I believe I do have a link if you're interested. I don't know if let's see if it's on here. No, it looks like it's under review right now. So I will have an affiliate account with Apex, but right now I don't. So you can definitely do that. I'll drop a link if I can find it. Actually, I'm pretty sure I got an email. All right, I'm still watching price action for you guys. I'm still watching. There's nothing for me right now. Okay, so we did not hit the high, which is totally fine. And we have this swing low here. This is not a breaker. This is a mitigation block. We do have this fair value gap sitting right here. Man, the 30-second just looks a lot better. The 30-second just looks good. You have this high, low, higher, high. We break below this low. We've already hit this fair value gap, or this. We went into this fair value gap and this breaker right here. We could see lower prices. It's 10:23. We're not in a macro. I'm willing to wait right here because we've already seen a bunch of crappy price action. I'm okay missing a trade to know that price actually wants to start moving in a direction that I want to take. But if price is going to keep doing this, I mean, these are small moves. This is okay. That's 15. So that's 9 handles. That would have been a 9-handle trade if you were to take in from this breaker right here. But again, we're on a 30-second in a consolidation in a bunch of crap to the left of it. I'm not going to take it. I'm not going to take that. Now, what could be interesting is we grab these lows here and we have a fair value gap that we could target this swing high right here. That is an option. Let's see if it looks better on the 1 minute. We have a 1 minute fair value gap right here. Let's see if this is still in discount. That's going to be a factor for me. I want to see if this is in discount. Okay, so we go from this high to this low. This fair value gap is in discount, barely, but we also don't have anything. We have no break-even points or where we move our stops to break even until we hit this high. It is a very small stop loss, but again, where are we at? Remember, where are we at? We're in all of this chop. If you look left, it's disgusting. So it makes everything less attractive. It makes it less attractive. So I am not a fan of it right now. Accumulation before a big move. This chop is horrible. 100% Matt. This is why, even though I'm reading price and I'm seeing how price goes, I'm not taking anything. I'm happy to read it. I'm learning as I'm reading, but I'm not actually losing money if I'm right or wrong, or making money if I'm right or wrong. This is what I'm doing for you guys live right now is what you should be doing when you're reading price. I get the benefit of talking out loud because I need you to hear it, and it actually reinforces to me my rules. So it actually, even though this is for your benefit, you'd be surprised how much this helps me to know and follow my rules because one, I have people watching, and two, I'm hearing myself talk about it. So I actually enjoy live streaming. Okay, so this is a nice candle. Let's see, 2 seconds. See if we want to start displacing. Now we're displacing. We grab this, we just hit this low here. Let's see if price is just going to turn back around and run the other direction. It's not going to even leave us a fair value gap. They're not even leaving us or giving us an opportunity to go higher. You could, if you've studied doing turtle soups, this could have been a turtle soup, but again, it's not something I study and I'm willing to do. ES triple highs will get taken out, hopefully today. Yeah, I haven't looked at ES yet. All right. What you're seeing me do here is um, lining up ES and ES and NQ over top of each other so I can compare. So it looks like NQ, we obviously made all-time highs. ES has not. We're not even close to all-time highs. I shouldn't say it that way. When you look at it in comparison to NQ, ES is way down here. NQ is sitting at all-time highs. So ES is looking weaker. Very poor correlation. We have equal low, relatively equal lows that price could hit down here, which we have relatively equal lows here that NQ could hit. This is, I like a bearish entry. We just are in the middle of chop that makes this almost untradeable. Look where most of the chop is happening. Here's our leg. Here's our last leg from our low to high. And so we look at this as premium, and this is as in discount. It's wicking down into discount and not staying in it very long. It's staying closer to the premium side right now. We have a bunch of consolidation to the left, so we really can't do anything about it. We're just looking at and looking for overlapping PD arrays. We're looking to see what price is doing, because really price is still doing something even in this crap. It's just, can we identify it and give us the confidence that, okay, I just need to wait, right? I can tell you to wait, but if you can see why you should wait and you can find that out yourself, then you're going to have more of an internal drive to not actually make these trades. And that for me is, look at where the 50% mark is, and all of this chop back and forth is happening right around there. What happens when we leave the 50%? We push higher, it looks nice, and then it comes right back down to equilibrium. It wicks lower, then comes back to equilibrium. See? I mean, and then you have all of this right here, just makes everything unattractive. Easy Zero, I do have a Discord that I do not have open, and there is nobody in it right now. I was just saying this, who did I say this? I said it to you earlier. My goal right now is to do everything on YouTube. So this will be my area to build my community right now. I will offer a course, but this is going to be where we're going to hang out. And when it gets to the point where the chat is just, I can't read questions, it's too much, we have too many people on there, then I will look at opening my Discord to do live streams on Discord, probably a couple times a week, and then do a few times a week on YouTube. So just to help manage, because I've done stuff like this in the past, and it's all about being able to manage my time and manage the expectations of the amount of questions people have. We're all great data from the fair value gap at 7 a.m. Let's see. Oh, what time frame you on? On the 5-minute, looks nice. On the 5-minute, here's what I like about it. Look where the bodies are respecting. See how no bodies closed below this? That's a bearish signal. I'm sorry, I said that incorrectly. That's a bullish signature in price. Bullish signature that we're going to see price move higher. This is telling us order flow. Where is order flow going? It's telling us that order flow is taking, sorry. I had somebody calling. It's just telling us price wants to move higher. That's the order flow right there. What should I learn in ICT? You need to go over core content to understand core content month 1, 2, 3, and 4. I would for sure go over. And then, stop. What are you calling, David? Sorry, I'm going to have to take this real quick, guys. Okay, sorry about that, guys. I apologize. Father-in-law calling, telling he needs some help. So what I was saying for Easy Zero, for you, if you're going to learn something, focus on the first 4 months of ICT's core concepts, and then go into he has 12 models that he put out for entry models. Watch number 6 and number 7. Those are the market maker models. Market maker models are the formation of price around the breaker that I use. I use the breaker, and the breaker is usually within the market maker sell and market maker buy model. So that is where I would start, get an understanding of reading price, and then after that, the best thing you can do is just turn on some ICT live streams, just like I'm doing here, and watch him read price. Why does he say, what PD arrays is he pointing out? And then your job as a trading scientist, I should say, is to figure out why did he pick that one if he didn't clearly say. ICT has done that a lot where he won't really give much detail. He just tells you what he's watching. But you need to know why. You need to know the reason why behind it to give you the conviction and the understanding so you can do it next time. If he just tells you a random fair value gap that he's watching, well, it doesn't help you identify the next one. So those are the things that I would focus on if I'm just starting out and I'm wanting to watch ICT's concept, because he has hundreds and hundreds of videos and it's just so much. Start with the core content, 1, 2, 3, and 4, the first 4 months. Then go into, let me pull it up. I'm going to give you the right name. I don't have the right name here. Let's see. Where's my subscriptions? Here we go. Okay, so if you go under his playlists, let's see. All right, so here's his playlist. You have the ICT charter content. If you go under ICT's charter content, you'll see Model 1, Model 2, Model 6 and 7. Model 6 and 7 are the ones that I would watch when it comes to the market maker models. But before that, you're going to want to watch the core content. You'll see core content all right here. You're going to want to watch core content month 1, month 2, month 3, and month 4. Once you start getting into the later ones, I'm just not a fan of some of them as much. He goes into using the dollar and looking at economic trends, and I don't watch all of that stuff, and it's just so much content that at some point I have to figure out where am I going to draw the line. And so for me, I'm drawing the line on that content. You can get a lot out of that and then watch his live streams. You can watch his 2022 mentorship, which goes over the model 2022, which is very similar to the breaker. The only difference is instead of stopping at the breaker, it will reach higher into a higher fair value gap. So those are some things that you can really focus on if you are just starting out and wanting to watch ICT's concepts and his content. So let's give you guys an overview here of what we're seeing in price today. Here is the 15-minute. I see more wicks than I see candles. Wicks, wick to the upside, wicks to the downside. The bodies, as ICT talks about, really tells the story. And what is the story? I have no idea. There isn't. There isn't a clear indication what price wants to do right now. That's on the 15-minute. If we go to the hour, we have 17 minutes left in this candle right here. $17 minutes left in this candle. There's no fair value gaps below except for this one on the 1 hour. But that's what is that? That's 150 points away. Price could easily go down there, but there's just not much for us to look at right now. We have the 4 hour right here. Look at the 4 hour. The 4 hour came down, filled in this 4 hour fair value gap, then wicked down below this low. I think by 25 cents, and then has now made new highs. If we go out to the daily, there's literally nothing here. For the weekly, we have this big fair value gap, which I'm interested in, but that's probably for next week. So if we continue to see bearish price action, we should see a breakaway of this consolidation, which will be nice. I really do like this 5-minute candle that we're currently on right now that closes in 50 seconds. And we're about to start the micro, or the next macro. Let's see what price wants to do. Now that we're entering the new macro, which is from 10:45 to 11:15. So we have equal lows right now that's just formed. Equal highs here. We still have this 1 minute fair value gap that we still have not broke. If we break that 1 minute, based on how many times we've respected it, My guess is we will go for probably these lows. That's the only thing I can think of. I mean, because there's nothing left other than the order block, the open of this order block right here. If we start being aggressive right here on this candle, am I going to take it to target these highs? The answer is no. And the reason why is we have equal lows right here. These equal lows are a magnet for price. So it could go close above this and then just come back the other way. And we have this price action to the left of it. There's a good chance I'm not taking a trade. I mean, that's the reality of it. And that's the reality of trading. But if there is a time frame where we have a greater chance of price running, it's now. It's within the macro, the 10:15, or excuse me, the 10:45 and 11:15 macro. I'm assuming we're still seeing nothing on ES and NQ as far as correlation goes. Yeah, really nothing. Now, because we have equal lows here and equal lows here, I would not be taking this on in my live account. That's just, it doesn't make sense because I don't want to risk it. But if you're on a demo account, you could do this on a demo account to see how it plays out. Because this is a decent candle. And if we do close with these equal highs, they could hit. So that could be something that you could practice. I'm not going to take this because of these equal lows here. But you could, if you wanted to demo it, or I guess if you don't do demo and you do eval, that could be a potential eval play. Let me go down to the 1 minute. I guess I'm looking at the 5 minute. Let's see if the 1 minute looks any better. As far as SMTs go for ES and NQ. Okay, so we do have an SMT here. This made a lower low. And this made equal lows. So that would be considered an SMT. But still, I'm not doing anything with it. Let's remove this. That's irrelevant at this point. I really want to see price go down. That's what I want to see happen right now. There is not an entry for me. But we have these equal lows. We have already made our all-time high. I would like to see price move lower. So when you're waiting like this, don't get so stuck in one time frame. I know obviously I have the 1 minute and 5 minute and 15 minute on my screen. The 15 minutes off screen, you won't be able to see that. But you want to start thumbing through different time frames. Go from the 1 minute to the 2 minute. Well, that looks like crap. But also look at this. One thing that stands out to me is I'll put it on here. Is this 2 minute. Look at how it's respecting this 2 minute. Look at the bodies. That's another nice signature in price as far as bullishness in the market. If we close below this and then close below the 1 minute, that could be a potential entry. So I'm going from the 1 minute to the 2 minute to the 3 minute. So 3 minute doesn't have a fair value gap and it's in all of this chop. So 3 minutes irrelevant for me. And the 4 minute is irrelevant for me as well. So that tells me, hey, 1 and 2, the 1 and 2 minute both look really good. Which one looks better and decide which one you may want to play in. So I'm looking at the 1 minute right now because that's what I've been watching. But just don't get stuck in one time frame. Go in and out because I've seen breaker setups on the 2 minute and the 3 minute that looked like crystal clear on that time frame that I missed because I was just so focused and so set on the 1 minute time frame. So thumb through those different time frames. Here we go. Look at that again. We went into this 1 minute fair value gap and then we just wick. Horrible price action. Horrible. I'm going to be proud of myself for not taking the trade today. I am. I'm going to feel great about it. Now, I wouldn't feel great about it if there was this giant breaker that we missed. But to say I didn't take a trade and all this crap, oh yeah. That is something to be proud of. That is something, if you can find the pride in that, that tells me you have experienced, you have been trading long enough to have traded in environments like this and have lost a lot of money in that. It makes for a boring It makes for a boring live stream, but I can't do anything about that. Trying to make it as lively as I can here, folks. Get some excitement going. There's nothing there. There's nothing. I'm thinking out loud here. Look at the 5 minute. Try to eliminate the bodies. Or eliminate the wicks. Just look at the bodies. Okay? High, low, higher high. Now, look at the formation of price. On the 1 minute, it's like, that's disgusting. The 5 minute, if you can get rid of the wicks, we're seeing a potential formation of a market maker sell model. That is what I'm seeing. That is what I see. Obviously, we can't do anything about it, but that's what I'm seeing. Now, it could be totally invalid here in a minute if this candle just explodes higher right here. But the bodies are telling the story of where price wants to go. Look at the close of the bodies above these all-time highs. We closed barely over these all-time highs, and the wicks are doing the damage. ICT talks about this all the time. The wicks, the bodies tell the story, the wicks do the damage. So you may say, oh, well, this is going short. And then guess what the price wants to do? It wicks higher, stops you out, then comes back down and closes, respecting the bias for the day, or respecting the narrative that it wants to tell smart money traders. So the narrative in my mind right now is bearish. This is bearish narrative. I just need to see a clear, concise opportunity for an entry to go short. And I'm biased. My bias on the day is short. Why? Because we hit all-time highs first thing in the morning. Well, when you have all-time highs, there's nothing to the left. So price could either just continue to explode higher, which they won't always do that, or price will retrace. So we're looking for that opportunity to go short, grabbing 10, 15 handles, and then getting out. Looks like we might target these equal highs. I could see us targeting these equal highs here. If we do that, if we target these equal highs and we don't continue the aggression, we could see a move lower. That's what I would want to see. Right now, my narrative that I want to see play out on the 1 minute, and 2 minute is an option. Let's see if the 2 minute looks decent. 2 minute could work, but based on the time, it's 10:57. I'm going to do the 1 minute. If we can see price if we can see something like this, that is what I would be interested in, with an entry right here. Okay? So we're seeing some aggression here. We closed above it. This is an inversion. You could be in that, targeting these equal highs. Okay? But I'm not interested in that. I'm looking for a potential short opportunity, and this is the narrative I would like to see. High, low, higher high, little bit of consolidation, aggressive move lower, creating a market structure shift right here, and then price coming back up, touching that breaker for an entry to go short. That is what I'm looking for. That's what I would like to see. Now that I've come up with a potential scenario, if price actually begins to do that, guess what it's going to build? It's going to build confidence that I might actually have an idea. Confidence enough to be able to potentially take a trade. Now, it may do all of this on a lower time frame, maybe the 30-second. But we want to see what price wants to do here. Does price did just make the smooth edge jagged. We have a little swing high right here that it may want to grab. We don't have any. We have one fair value gap here. We don't have one here, so we really need to see some displacement, or we just go up in time frame. We have a fair value gap right here that price, if moves higher a little bit, could come down into and then move higher again. So this is what I'm watching. There we go. Let's see if it does it. And if it doesn't, I mean, I've lost nothing because I'm not in a trade. One second left. Okay, so let's see if we actually balance. Okay, we just went into this. We went into this fair value gap. We just did the fair value gap. Let's see if we can actually make a higher high here. Okay, here's another candle right here. Here's another fair value gap. Let's see if the low wants to be made here. Okay, obviously this fair value gap didn't work. Maybe this fair value gap works. This is me playing scenarios out in my head, looking for opportunities. Okay, so this reaction is very good. I like this. We may come down a little bit, but I want to see now a higher high made. Let's see, how big is this candle? 15 to 18, that's 3 handles. That's 5 handles. Okay, so there's our higher high. We have our high, our low, our higher high. Look at that bearish reaction. Holy smackarooskies. We're not even going to get an opportunity. That's going to show us on the 30-second probably. But no entry on the... Oh, yeah, so here's our high, our low, our higher high. Here, if we make a lower low, that would give us our opportunity. And then this would be the breaker, but I just don't like the way that candle looks. It could work out. I just don't like the way it looks. But see how price is actually playing out in our way. It's just not playing out how I would want to see it right now. That sucks. Why did you have to be like that, NQ? Why do you have to be like that? Why couldn't you give me just a green candle like right here and then go down? Now, if we make a higher high above this candle, that actually would make this a little more attractive. But we obviously still have to wait for price to come back down. Now, why am I considering this as a breaker even though we have a higher high here and a higher high here? Because we had some equal highs and it is a level of liquidity. Price does not have to go back up to these all-time highs. This is the all-time high right here. In addition to that, I'll be coming out with this in my next video. Where is the next obvious fair value gap from this high moving right that has not been used? Honestly, it's a trick question. There isn't one. There is no reason, unless we want to move higher, that price should have to go higher. Give me a second, I'm about to cough. So because of that, the only reason we would go higher is because we're bullish on the day and NQ wants higher prices. If it is not, and we're going to stay in consolidation like we've already seen in this crap, well then this is enough for price to say, all right, I'm grabbing this liquidity, I want to move lower to continue this downside potential trend. So we have this high, low, we've now made a higher high. Price could just blow right through it and continue higher. Then I'm not making a trade, I'm done for the day. If price begins to wick lower and start moving lower, breaks below this swing low right here, now I have my trade idea and I'm looking to go short. Okay, we just broke that high right there, and we are, I mean, it looks like we're going to break this high. So it looks like we want higher prices. So I do not have a trade idea. There is not an entry for me. There wasn't even really a trade entry for me here except for this inversion, but I didn't take this inversion because we had these equal lows. We had equal highs here. This did have some displacement. You could have reasonably taken this as a risk. You would have gotten out here, but you would have been stopped out here if you chose to hold for these highs. So this would have been another break-even trade unless you made this your target. And then from that point on, there was no additional entry. No additional entry. At all. Nothing good. Is this helpful? Guys, for those of you watching, is this commentary helpful? Is this educational? Let me know. Let me know your thoughts if this is helpful, because I think it is. I loved when ICT actually did his live streams and he talked through price. The only downside is he would always get on sidetracks and he would go on rants for literally an hour. I like to stick closer to the price action. We'll talk about other stuff that are important. I mean, this is a day trading channel that advertises their commitment to Jesus. That's me. I love Jesus. I love the Lord, and I want to help believers become financially free. But most of the time, we're going to be spending our time talking about the charts, and then maybe any revelation impacting words that I feel like the Lord has given me to share with others. So that is what we'll be doing. Hey, Anton, welcome. Glad you're here. Glad you're finding it helpful. Here's a 15-minute BISI right here, guys. So this was a market maker buy model. We have our highs here, our consolidation here. For easy zero, this is what I'm talking about, market maker buy models. Here's our initial consolidation. We break lower. We have some distribution stage 1, little distribution stage 2, and we make our low. If we had our model in here, we'd be looking for a model because we just hit this breaker. Reason for us to turn. Now we go from the left side of the curve to the right side of the curve. We're looking for our entry. We found a reasonable place for price to turn and run the other direction. We would have looked for a breaker of some kind, an entry model. It could have been a fair value gap, mitigation block, breaker. It could have been an inversion gap, whatever you want to trade. And then guess what it does? It moves higher. And then it eventually breaks this high right at the 930 candle. So you would have been out at 930. But this is a market maker buy model from beginning to end. 5-minute breakaway gap, Matt. Yeah, that would be a breakaway gap potentially. It just depends if price wants to really move higher. This would be the breakaway gap. This could be considered the breakaway gap as well. This could also be considered a measuring gap as well. So if they're usually the first fair value gap in the leg that has displacement is considered the breakaway gap. The second fair value gap, and this is typically on a higher time frame. The second fair value gap would be the measuring gap. Now, ICT has not given a lot of details on measuring gaps, so anything that I honestly would share is kind of speculation, so I really won't talk about it that much. Does it occur in macros? What is it? Oh, does the market maker buy and sell models occur in macros? The answer is key points. Key points of those the key points of those market maker models will occur in those macros. But I mean, look at this. I mean, this is a 15-minute time frame. That's from 2 a.m. and it completed at 9:30 a.m. That is a 7.5 hour trade, or a 7.5 hour cycle potentially. You're not taking that whole cycle. You're going to look for an entry somewhere within that market maker buy model. For me, I'm looking for somewhere close. Sorry, I'm on the 15-minute and it's off screen. I'm sorry. So this 15-minute shows that the beginning of this started at 2 o'clock and went all the way to 9:30. That's 7.5 hours. So it goes beyond macro, but key points. Look at where this, what time is this low? It's at 6:30. Okay. What time is this candle? It's 7 a.m. If we go down to the 7 a.m. candle, there may be a potential entry for something. Let's go around 7 a.m. See, or 6:45. Here's 6:45. Let's go from 6:45 to 7:15. So let's just look at this price action here. And let's see if we see an entry model in here. So we have a nothing that is extremely obvious. Nothing extremely obvious for this. But where price began moving within this macro. So even though we didn't have an entry, which you won't get entries on every macro, you will tend to see price move aggressively in one direction or another in those macros. That's when the algorithm gives price a set of instructions to move to in a specific direction. And so here it did. It moved aggressively. We could go to 8 a.m. here. Do we see anything? No, that's okay. It doesn't have to happen every time, but more often than not, that is when you get your highest probability setups. So I'm willing to take a breaker outside of that time, but I really like when they're inside this time frame because I know it's another level of what's the word I'm looking for? It starts with a C. Cohesiveness. I can't remember the word. Sorry. It's wow. That's embarrassing. It's another level, overlapping PD. It's not a PD array. Man, that sucks. I can't remember. I don't know the word, but it adds to my conviction that I want to move higher. I do like, the only thing I like here is this low, high, lower low. And so this is our breaker right here. Look what happens within this 1 minute breaker. Okay. Let's just remove this 15-minute, or let's just change this color here. Okay. So look what happens in that 15-minute. It consolidates in that breaker. That's common. That can happen. And then it can move higher, and it may not come back down into this breaker, which it doesn't. It actually just runs higher and takes off. Because the market structure shift doesn't happen until here and doesn't give us an opportunity. But macros, I like when stuff confluences. Thank you, Anton. Oh my gosh. when you have a macro overlapping my PD arrays, it gives additional confluences that gives me more conviction that I actually want to take the trade. So hopefully that answers your questions. Thank you, Anton. Major brain fart there. Now, I would never take this, but here's a breaker here. We have a low, a high, a lower low. Price consolidates, moves above this high right here, and guess what it actually hit? It hit this high. That right there, I would never take that because of everything that's there. But even in that consolidation, price will still respect breakers. You just have to find the right one. That's why I don't take any of this, because there could have been 3 or 4 breakers that I could have identified that it would not have worked. But after price action happens, then it's a lot easier to see, oh, well, hey, apparently it was this one. Doesn't help me much on making a trade, but it's nice to be able to identify and see them in price action, whether it's happened already or not. It's just helping you build that confidence and conviction that price actually does work and flow with these breakers, with these inversions, with these fair value gaps. That's how price moves. So it just builds that confidence. So what time is it? It is 10:16, so the macro's over. Looks like prices may move aggressive down. We'll see what happens. This is not a breaker. This is a mitigation block. High, low, lower, high. Break, make a market structure shift. They're just not as reliable as a breaker. So 0 trades for me today, guys. There's a good chance I'm going to be done here in a few minutes. Unless you guys have any other questions, probably call this a day for the stream. Unfortunately, we had a bunch of crap that took place. Nothing. Great conversation. Great education. But what I'm gonna do this last thing, this a little bit of motivation for you to build up your determination to not take a trade, is what if you did not take a trade, you should be so freaking proud of yourself. If you did not click the button in all of this, you should be, I mean, it's hard to say cloud 9, but you should feel real good about yourself, because 70% of trading is psychology. And most of people's failures happen in taking trades in this type of environment. So they may be positive, they may know how to trade, but they don't know how to keep their money. You not trading in this re-solidifies that you have the ability to not trade in chop, and it helps you build that confidence that you can keep your money. It shows you that you have the confidence that you can keep your money by not trading in this, waiting for those A+ setups, not trading those B-, B+ setups, avoiding those so that you can preserve your capital for opportunities where have a higher probability of success. So if you didn't take a trade, good on you. Way to go. Count that, write that in your journal that you did not take a trade. Write that I was able to go throughout the entire day or the first few hours of trading without taking a single trade because there wasn't an A+ setup. Mark that in your journal, tell yourself how, pat yourself on the back, and then walk away and wait for another opportunity. Honestly, the opportunity could come at 2 p.m. today. 2 p.m. New York Standard Time is when FOMC is happening, so I'm probably going to see what actually happens around there. I will be back on the charts. Probably won't be streaming. Depends how I feel. Maybe I will stream. I like talking to you guys. So I'll let you know If you don't follow me on X or Twitter, you can find me on Twitter there. It's Day Trading Jesus, and I'll post something on there if I'm going to get live. I'll drop a link on there live, or if I'm going to go live as well. So follow me on there if you don't already. And we will see you guys. We'll see you guys later, okay? Have a blessed day, and we'll talk to you soon. Bye-bye.